Venture debt firm Stride Ventures is stepping onto the global stage. The fund has raised $300 million from global institutional investors, including sovereign funds, banks and asset managers, and is now eyeing a $600 million close across India, the GCC and the UK. With over $1.6 billion committed to more than 200 companies so far, Stride is emerging as a key bridge for innovation capital, connecting Indian entrepreneurship with global funding and setting new benchmarks for governance, scale and sustainability in venture lending. Joining me now to discuss this further is Apurva Sharma, the managing partner at Stride Ventures. Apurva, thank you so much for taking time out and being here with us on Startup Street. You know, Stride Ventures has raised an impressive $300 million from global institutional investors, right? What does this milestone mean for your vision of building a truly global innovation capital bridge from India?
Thank you so much for having us on this, series. We are very excited about this achievement because Stride Ventures had this vision of becoming global and mostly the largest player in sponsor-backed credit globally, because today all sponsor-backed credit players are largely regional in nature, which essentially means that companies and startups which are scaling beyond borders, it becomes very difficult for them to kind of prove their credit worthiness across regions and raise money in different currencies. So Stride is that player that will become the largest global sponsor-backed player, sponsor-backed credit provider, and we'll be able to do cross-border, synergies in INR, US dollars, as well as sterling.
Sure, and you're targeting a $600 million close across India, the GCC and the UK, right? How are these markets sort of complementing each other in Stride's global expansion strategy? And when do you hope to, close this?
Sure. So this is across 3 funds. We do expect to close it, by March, April of next year. In terms of closure for all these 3 funds in India, GCC and in UK. The reason we've selected GCC is because the policy is very supportive. The economy is diversifying from oil economy. There's a lot of support and focus on really boosting financial services. Debt as an asset class has evolved beautifully in the last decade or so. And there are very few players who have entered that region. There's a lot that can be done, a lot of interesting structures. So we see it as a first mover advantage. And we see a very, very strong deal pipeline in GCC. In UK, we think that there is scope for players in the sub 15-20 million range. Of course, there are global private credit players that are operational in UK and Europe. But in the sub 15 million range, there is a gap. And there are not enough players backing that ticket size, which is also very key for any sponsor-backed credit player.
Sure. And Stride has already committed over $1.6 billion to over 200 companies, right? If you could take us through what kind of sectors or themes are showing the strongest demand for venture debt globally right now?
So this has a very regional nuance also to it. So in India, the biggest sector in terms of quantum of deployment for us has been consumer, because of the inherent working capital need, capex, the fact that they have to hold inventory, there is offline presence, so that you have receivables from offline players, modern trade players, etc. So working capital is a very important use case for consumer companies. The second important sector for us is fintech or financial services because of FLDG requirements or onward lending, book building, etc. And the third important sector for us has been clean tech, essentially across OEMs, battery recycling, battery swapping, because of the capex-oriented nature of the industry. So these 3 sectors are the most prominent in India. In GCC, the most important the sector which has the maximum amount of credit requirement is fintech and financial services, because it's evolving there in a big way. And there are multiple facets of fintech companies that are evolving in the GCC. UK, it's more, I would say, tech and enterprise SaaS kind of companies because of the nature of companies that thrive in these regions.
Sure. And how do you see your AUM shaping up over the next year? And what does that signal about investor appetite for private credit and venture debt out of India?
Sure. So, we expect the AUM to grow significantly now that we have funds in GCC and UK also. And from the UK fund, we will be able to do a little bit of Europe investing also. So we think it'll grow leaps and bounds from here on. Also, with respect to access to capital, the fact that the 300 million is largely from sovereign funds, asset managers, corporate treasuries, they have, deep capital. And it essentially means that the future fundraisers can potentially be bigger which will essentially result in a higher AUM. And we also see a lot of interplay in the UK, Europe, India corridor, as well as the GCC India corridor. We are already seeing a lot of Indian companies choosing GCC as a natural hub for organic extension.
Sure, and Stride is among the few Indian firms to also voluntarily align with the UN-supported principles for responsible investment, right? So how is this ESG commitment influencing your investment approach and governance model?
So essentially, we are trying to inculcate this in our portfolio companies with respect to what are the parameters that we want to monitor. And as a UN PRI signatory, there are lots of different parameters with respect to obviously, using renewable sources of electricity, with respect to less wastage, with respect to equality, gender equality, etc. So we are trying that we inculcate, the nuance of measuring those parameters, because a lot of early stage companies don't really look at monitoring a lot of these parameters. But if you can train them and guide them to capturing some of the basic metrics, it helps you be a responsible investor. And also it is a mandate now with a lot of global AMCs. When LPs look at you, when sovereign funds or DFIs look at you, they will expect you to be a responsible investor.
Being a responsible investor. But, if you could quickly tell us, we're running out of time. From an India perspective, how do you see Stride's growing global network helping Indian entrepreneurs scale internationally? And what kind of companies are you looking at?
Sure. So in fact, we've already seen a lot of Indian companies, who are building from India for the world, right? Now, when they open a subsidiary in the GCC, UK, US, Europe, they will need access to capital in US dollars or sterling, etc., apart from INR, which is their base currency, where the holding company would be there, or say the expense center would be there. So it has helped us attract a lot of different kinds of deals, who are actually truly global in nature, and founders definitely prefer somebody who can help them grow, go cross-border, and also help them with relationship coverage globally,
Sure.
right? So we can connect them to VCs or private equity investors or banks in those respective regions.
All right, Apurva, thank you so much for taking time out and being here with us on Startup Street.
Thank you so much. Pleasure is all mine.
All right, up next, we're going to take a short break.